The stock price of DraftKings has had a fairly volatile year. We can see it's traded up near $74 in March. At the moment, it's trading around 52. So it is still up for the year, but is the latest weakness a buying opportunity, or are we set to see further slides for the stock price? I thought it'd be interesting to take a look at DraftKings, given that they've recently come out with earnings. They were slightly better than expected. I'll talk about that in a second. But we can see over the last, I suppose, 8 months or so, the price has been fairly sideways. We've seen lots of volatility, but no real direction. So as usual in this video, I'll talk a bit about the recent news. We'll look at the levels to watch, then we'll come back onto this and see where the opportunities might be. Hello, I'm David Jones from Capital.com, and I thought this time around we'd do an update or have a look at DraftKings, popular stock with retail investors. Bit of a volatile year, still up for the year, but well off the highs. So I thought, well, let's take a look at some of the recent news, then jump onto the platform and take a look at the charts and the technicals in a bit more detail. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, it's a new channel for us and it helps us continue to push out a few different videos throughout the week on the different stocks that we look at. Right, let's get into it and take a look at DraftKings in a bit more detail. So if you're not familiar with their business, it's based in the US. It's a US fantasy sports and online betting operator. The company was established back in 2012 and it went public, came to the market via a special purpose acquisitions company. And that happened in April 2020. So it's been since then, we've been able to buy shares in DraftKings. As I said at the beginning, we've seen some big swings this year in terms of what the stock price has been. It's been a volatile year, but it's well off those earlier highs, but it's still positive for the year. The stock is still up around about 13% from where it ended 2020. We've just had the latest earnings for the company out this month in the last few days. And although the company made a loss, it was better than the market was expecting. So loss per share came in at 26 cents per share. I think the market was expecting around about 40 cents loss, maybe a bit more. And the revenue jumped quite dramatically, up by more than 300%. So as I say, we've seen the share price hit quite hard in recent months, but with the expanding legalization of digital sports betting in the US, is this going to broaden the market for DraftKings? Is it going to help the stock price? Or actually, is it going to bring in more competitors? We'll take a look at the technicals in a second and see where the opportunities might be. First of all, let's talk about the big levels to watch. I think we've got a fairly tight range at the moment when it comes to support and resistance. I think the immediate hurdle on the upside coming in around $56. For me, that's the next resistance level. And we've got support on the downside just ahead of $42. It's perhaps been a little bit sideways in recent weeks and months. But as usual, to put some color on these numbers, let's take a look at the charts. I thought we'd start things off as usual with our 20-day moving average. I have to say, I don't think we're getting much from this at the moment. Moving averages work well when markets are trending, but not so well when the market is sideways. And that is what we've had really over the last couple of months. When the market's sideways, the 20-day moving average in this case and the price are fairly close together. So we see a lot of just flip-flopping around the moving average. The latest signal we had was a buy signal off the moving average back here at the end of July as the price moved through 48. So we have seen it perform quite well, that latest signal. It remains to be seen whether this means we're going to see the start of a new trend. If we have a look at the RSIs are much better in sideways moving markets because we have overbought, oversold signals. If we walk back through some of the more recent signals, we had a signal mid-July, which did pretty well with the price in the sort of $45 to $42.50 area. Didn't quite go overbought on the 8th of June, but we could see the RSI had reached an extreme and we did see the stock price start to roll over from there. And looking at where the RSI is now, again, we're not in overbought, but it is suggesting that perhaps it's got a little bit overheated on the upside. So perhaps we could get a bit of weakness here and a drop back into that more recent sideways range. But it's really not too exciting at the moment with it stuck in what is admittedly a wide range running from sort of $40 up briefly above 55, and with it at the top of the range or near the top of the range at the moment, some may take the view that we could see perhaps some sellers come back in. Let's take a look at the price action. So this is what we have at the moment, going back just over a year or so for the DraftKings stock price. So traded as high as above 74 briefly earlier this year, sold off, and arguably that weakness has stopped now. We haven't seen this trend continue lower since the lows in May. So I suppose if we wanted to construct a bullish argument from the technicals at the moment, we could say that perhaps we've seen it forming a base over the last few months. With good support coming in, 13th of May lows, just below $40. And then after that, that most recent low, middle of July, coming in just below $42. So a lot of support in 40, 42 area, that sort of one. But on the upside, we can see what a problem 56 has been. So it's managed to cap any recoveries over recent months. I think if we're waiting for a breakout that perhaps signals a new trend, I think 56 is clearly one level to watch for DraftKings. And if we saw that break, then I think people may well start targeting a run back up to these old highs at 74. So at the moment, a little bit sideways. I think from a trading point of view, traders review, weakness down to the mid to low 40s is perhaps a buying opportunity. From a longer term chart point of view, if we're going to see a new trend forming, I think we need to see a break through $56. We'll come back to it and see how the price evolves. That's it for the update in DraftKings. We'll come back to it and see how the stock performs in the months ahead. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your investing. For more trading videos just like this, please subscribe to our channel.